Bob, you're not selecting individual stocks over at Dynasty Financial Partners. You are creating portfolios and you're selecting managers. How do you pick those managers?
Yeah, so when we get a portfolio allocation top down using a top down macro framework, and when we'll either use cheap index, we'll use a factor tilt for where we are in a credit or market cycle, and then for alpha, we're looking for active managers to solve problems that we want to get at in both public and private markets.
And Dynasty has an OCIO model. That's an Outsourced Chief Investment Officer model. This has grown significantly. Other folks are using it. What makes yours better than the rest of them?
Better. So I think there's been a huge trend for advisors outsourced to grow, that if they spend more time on their clients, on planning, that they get more out of their business and a higher enterprise value. So not to mention, we have a large team, and we, over 30 years of investing, found ways to do well and beat benchmarks.
So the advisors themselves don't have to pick individual stocks. They can outsource that to you, correct?
They can outsource it to us. They can get complete, sophisticated portfolio allocation and focus on their clients.
But you still have a market view because you're creating overall portfolios. What is your outlook for the next year, for example, in the equity market?
Yeah, interesting. Coming into the year, I thought 25 was going to be a year for income. That after two back-to-back years of 25% in the S&P, I thought it would be, the starting point valuation-wise was not ideal. Expected some turbulence in Q1, which we're getting. Hedged portfolios accordingly. But the 25 would be a year to go get income. 7, 8, 9% is pretty easy to get in both public and private credit.
Well, in 2022, we saw stocks and bonds fall, and everyone was running to alternatives because they're not marked to market. We're still seeing people move to alternatives, even though the indexes have done fairly well over the last 2 years. Where do you see that headed?
Big move to private markets, and the high net worth investor with all the product that's come in over the last 10 years into this space, in the semi-liquid evergreen product, really bringing the ability that if you can take a quarter's liquidity risk, you can get 400 or 500 basis points over public in fixed income. And as you know, in the private equity side, so many of the best companies in the world are just not going public. So to access that growth, you'd want to use private markets or private equity.
And then finally, you're a market veteran. So what do you see over the next 5 or 10 years? Because we have seen a big evolution or move towards private markets and other things, whether it be Bitcoin or other types of alternatives. Where are we going?
Yeah, particularly the private credit market has exploded as the banks have retrenched from lending. The private markets have really come in to fill that void. I don't see that stopping anytime soon. And as I mentioned, I was just out at a big conference where both the big wirehouses or the big RA firms, the high net worth investor is still woefully underallocated to private markets. You saw Larry Fink put out a big note where they went out and bought a whole bunch of private market players to give that access to individual and retail investors. That's just the beginning as they move from, the new 60-40s looking more like 50-30-20 with the 20% allocated to private markets. So there's a lot of work to do to get the clients up to those levels.
All right, well, thanks for coming on and talking about it.
Thank you.